So gold is going to 100% be, in my opinion, the best asset to be holding during this period. And you can see, if you come to the conclusion that was the establishment of the Fed back here, they've only added pump and dump schemes. That's it. And they've played them, and they're the buyer of last resorts at the bottom. There's 3 clear cycles. Each cycle has got larger, has thrown up higher, and has fallen further down. And that is the law of action and reaction. We're talking Newton rather than finance here. So when I take you to the gold-silver ratio, which I will do here, and we come with that knowledge with so much more to fall, I kept warning, and I said it in Cape Town when we spoke with you, people will try jump ahead of the game and jump into future stages. And the stages are possibly going to be longer than you think. Everybody thinks this was the peak for the gold-silver ratio. Don't get me wrong. A lot of people have already misconstrued this very quickly. I am a silver bull. And in time, I will be a far larger silver bull than I am a gold bull. And I hold gold and silver. But phase 1 could extend and be longer than you think, because there is so much of the big money and the created liquidity that needs to get out of a huge bond market, not just in American debt, European debt, everybody's debt. Everybody's debt. Debt as an asset class globally is going to be affected by debt being affected in America. This is the chief leper that we all had to kiss to join and be synchronized in the single largest worldwide coordinated and synchronized event. We all kissed that leper. So there's debt write-offs to happen everywhere that are going to fall right the way down. They may not all have consumer loans, like I was describing on vehicles that America has, on the volume that America has it, but the governments, the municipalities have all overspent what they got in income. And they're all at a point now where things are going to unwind, and it's going to unwind across the board. So this is a very bad news story for the West, but it doesn't mean other places aren't going to feel some of the downdraft of that. If that's to happen, there's going to be a wall of money that has to run into gold that could take gold a lot further than people think. And when it's the big money buying, the key aspect to this gold move so far, it's not retail that's driven this price up. It's central banks, hedge funds, big offices, centimillionaires, billionaires, home offices, family offices, etc. That's where this wall of money is coming from. Government, big money. And we haven't started in the re-rating of the debt system. So we have a technical setup that could happen. It's not a promise. We're talking about the future, but we've had a squeeze here. And this is my one controversial thing. Silver will have its moment, and I think it will, because of the scale of everything, chronically outperform gold, potentially getting into a single digit to gold-silver ratio. But it first might get worse on the gold-silver ratio, because we haven't even started with the proper debt unwind. And this is, the gold-silver ratio is the big indicator of fear. That was your COVID event right there. Every time else, when we had 90, we've sold off. So this is a huge event that has just started. It hasn't ended. It's just starting. The big collapse of the debt market is just starting, and this technical pattern gave us a 171 to 175 range target, which could mean you could have silver at, say, $50, which is where it runs into a bit of resistance, and you could then, on the $170, be already looking at gold at 8.5, 9,700. Look how quickly we took out. I was saying 2.9, you might have a breath. We had a small breath at gold. We didn't have a long pullback for an extended period. It shrugged it off. It had a small technical pullback. Let's just revisit that. We said, remember, you're going to make the big target of 2,900. There you go. That was your pullback. That turned into a continuation pattern. It went higher. Then we said, okay, we've made the 3K. Boom. A little bit of schizophrenia here. But the only solution is gold and back in. We literally just traded in our community the pennant there on a shorter time frame to get more upside. We were highlighting this today. We just closed. That little is there, right there on low time frames, trading to the long side. Upside, volatility-based breakouts are continuing being dropped. This market is making a new high. Happy new gold high. I don't know how many it is this year, by the way, Alexi, but that's another new gold high. So let me leave that with you and see what you want to unpack in there.